Hi everyone, welcome to Investing Club. In this video, I'm going to be taking you through a new announcement by Cumulus Media and what it means for shareholders. And I own this stock and I'm not a financial advisor, and you should not consider this financial advice. And you should always do your own research and consult with your financial advisor if you are thinking about buying any stock. So Cumulus Media is a small cap stock. They are the third largest radio operator in the United States, and they are one of the stocks in my portfolio. I did a full analysis of that stock, and I will put a card up to it right now. So if you haven't watched that video, I recommend watching it first to get some context of what this announcement is about. Okay, so for the announcement, Cumulus Media, this is on May 21st, so a few days ago, Cumulus Media adopted a short-term shareholders' right plan designed to protect shareholder interests and maximize value for shareholders. The board has taken note of the unprecedented impact of the pandemic on the equity market valuations. So if you saw my video talking about this stock, the stock price tanked, right? This was an $18 stock and it fell all the way down to almost $3, right? And the board believes this does not reflect the company's inherent value or business performance, which I agree with, which is why I invested in this stock. I think they are severely undervalued and still think that they are an $18 stock. So the board declared a dividend distribution of one right on each outstanding share of common stock, and the dividend distribution will be on June 1st, 2020. And this plan is intended to protect shareholder interests by reducing the likelihood that any entity is able to gain control of Cumulus through open market accumulation. And lastly, this rights plan will only be exercisable if a person or group acquires 10% or more of the company's outstanding shares. So I got a few comments from people asking to explain this. And for anyone that's never seen this before, this company did what's called the poison pill. And so for anyone that hasn't heard of this before, the poison pill plan is usually used by a company in an attempt to deter it being taken over by another person or another company. And so for a company like Cumulus, a small cap company whose market cap has been decimated by the economic shutdown, they have become a target for a takeover from other companies. And in essence, what this rights offering will do is if someone starts buying a large portion of the company, if someone buys 10% or more of the company, all of the existing shareholders have the right to buy more shares at a discount. And this is usually effective because it dilutes the shares of the person trying to take over the company. Because if they bought 10% of the company and then this rights plan was triggered and everyone bought more shares, then they would only own collectively 5% of the company because their ownership was diluted. And so this tactic has been around for a while, since the 1980s. The main purpose for it is to protect shareholders. So if someone wants to take over Cumulus, something they could do is they could buy all the shares for $3 a share, and then once they had control of the company, they could start selling off assets and then give all the shareholders something like $6 a share of assets. And that might be good if you were like me and you bought shares when they were low at under $4. But if you're someone who's been holding this stock since it was $18, you would not want to be forced to sell your stocks at $6 a share. And so this plan is intended to protect the long-term shareholders by deterring someone from taking over the company. So what would happen if someone did accumulate 10% of the ownership? Well, then if you were a shareholder of the company, you have a right to buy extra shares at a discount. And so I don't think they said how big the discount would be, but you would be able to buy the shares for cheaper than they're currently trading at, and then you could either hold on to them or instantly sell them for an instant profit. So for shareholders, this is pretty good news. In all likelihood, this won't have any effect because these plans are generally effective at deterring takeovers. So in all likelihood, nothing will come out of this. There will be no hostile takeover of this company, and the rights will stay worthless. But in the event of a takeover, if you were like me, if you were someone that bought shares when they were under $4, then this is a great thing because it will allow us to buy even more shares discounted from where they are now. And there have been examples of this in the past. Papa John's did it in 2018. Even Netflix did this in 2012 when Carl Icahn attempted to take over the company. So this is a proven tactic and it has worked in the past. Now, just to give you some perspective, this has become more common this year because with the shutdown and with the stock market crash we had, a bunch of small cap companies' share prices got decimated. And that is exactly the time when a larger company will usually take them over, when their shares are extremely cheap. As you can see from this graphic from Bloomberg, these poison pill plans have accelerated at the fastest rate since 2009. And again, that was the Great Recession, where again, a lot of small cap company share prices were hammered. So what does this mean for shareholders and anyone who's interested in this company? Well, this is pretty good news. It shows that the management team is aware of how undervalued the stock price is, and that they have started taking action to protect the best interests of shareholders. And so while likely these rights will never be triggered and we will never see anything out of this, it's a good sign to know that the management team is taking action like this to protect shareholders. And it is a good sign that they will continue to do things to increase shareholder value. Like I said in my analysis of the stock, they have a bunch of tower sites that they're trying to sell, and they're in the process of selling some land to Toll Brothers. This is a good sign that this company is moving forward with increasing shareholder value. So that's pretty much it. I just wanted to make a quick update with one of my holdings. I know a couple of you asked about this, so I hope it cleared things up. If you have any questions, leave them down below, and I will put the link to the article where you can read more about this sort of thing. Be sure to like the video if you haven't already, subscribe to the channel, and I will see you on the next video.